All right, ladies and gentlemen, welcome to another video. This is Jack, and are you interested in buying a home? Is this your first time buying a home, or are you just interested in getting a little bit more information on how to purchase a home? This is the right video for you if that is the case, and without further ado, let's get into it. So first of all, if you're purchasing a home, you need to have a few things lined up for you. Unless you're purchasing cash, you will have to apply for a loan, which is most likely the case. And the things that you need to have is, first of all, a good credit score, and we're going to go over how to check out your credit score and figure out what's a good credit score. Number two, you need a good work history and a good employment. And number three, you need to have a good situation financially where you don't have much debt or that is causing you not to qualify for the home. Now, one last thing that you need is the money for the down payment and for your closing costs. Now, how much do those amount to? And it depends if you're going conventional loan or FHA loan. The thing that you need to know about these two loans is that the conventional loan is sponsored by private lenders, whereas the FHA loan is sponsored by the government. Okay. The government has some requirements that are different from the private lenders. So usually if you're going with a private lender, that means that you are in a better position to purchase a home. Whereas if you're going with the FHA loan, it is going to be a government-backed loan. However, you will get you have to pay a little bit more in closing costs. And we'll go over those in a second, but all you need to know is that you have two options, conventional or FHA loan. The conventional loan, you have to come out of pocket with 3% down payment. The FHA loan, you have to come out of pocket with 3.5% down payment. So about the same. And this is if you're a first-time home buyer and you plan on occupying the property at least for a year. The other thing that you need is the closing costs. When it comes to closing costs, it does average around 2% of the purchase price. So let's say you're purchasing a home for $300,000. You need 3% down payment plus 2% for the closing costs. That would be around 5% of the purchase price in order to purchase a home. In the case of $300,000, that's $15,000 down. Now, there are some ways where we can include the closing costs, which is the 2% I talked about, into the purchase of the home, and I'll explain that later throughout the video. So let's get into this and see what we can do when it comes to purchasing a home. So right here, you'll see this. This is Credit Karma. I love this website. Everybody, if you don't have an account, you should definitely open up an account today. It is free and it doesn't hurt your credit score. And just to show you here, this is your credit right here. You know, when it shows up, hopefully that's your credit or even better. This is where you want to be when it comes to purchasing a home. You want to have at least 700 as far as credit score. Anything above 740 is pretty much the best, where you're going to get the best interest rate. The lower you go with your credit score, the higher the interest rate is going to be on your loan. So I like this website though because I know they promote a lot here because it's free. They got to make their money some way. But they show you a lot of things here. You know, the credit card usage, for example. It shows you here that you shouldn't have 30% used up of your credit card compared to your credit limit, because as you can see, it's a high impact on your credit score. So if you're at 3%, that's great. If you keep it under 10% is the best. Now, if you're below 30%, it's pretty safe, but you don't want to pass that 30% because that's when it's going to start hurting your credit score a lot. So you see, it says below 10%. So it gives you a lot of tips, good tips on what's happening, and also show you how, the progress of your credit score. For example, as you'll see here, it show you, what your credit score is and how it fluctuates throughout time, depending on how much credit you're using. And here's the score hack, for example. If you need like a few, let's say 20, 30 points extra on your credit score, it shows here, hey, pay down this credit card, it's $921, and it will likely go up like 10, 20 points. It will tell you everything if you click on show me why. It will also show you here what's hurting it. Hey, you have 7 hard inquiries and things like that. But pretty much, if you have low credit card usage, you don't have any derogatory marks, which is collections, tax liens, bankruptcies, and stuff like that, you should have a good credit score. If not, you want to try to get rid of those by calling the collection companies and try to negotiate down the price. These collection companies purchase your debt for pennies on the dollar, so you should be able to settle around 20-25% of that collection. I'll probably make a video about that. But enough with the credit. I just wanted to give you a little bit of an overview so you know what to expect when it comes to credit. You also want to pay off high interest loans. What does that mean? Let's say you have a car loan that is 10% interest rate every month. You want to pay that off because it's most likely hurting your credit and it's hurting your ability to qualify for a loan. If you have any debt that is costing you a lot every month, then definitely you should do it. Let's say a car is costing you $700 per month. Just for the payment, the monthly payment, that is going to hinder your ability to qualify for a good amount when it comes to a house. And also, you need to make a certain amount of money. Let's say, for example, you need to purchase a home that is $300,000, right? In order to qualify for a home that is $300,000, you probably need to make about $4,000 per month, maybe less. You could qualify for even $3,000 a month. The way it works is, let's say you make $4,000 per month, the lender is only going to qualify you for up to 50% of what you make monthly. So your mortgage payment cannot be more than $2,000 if you make $4,000 a month. Okay, what does $2,000 qualify you for? During these times with super low interest rates, you should be able to qualify for probably $400,000. Probably, 400,000. Let's see what that comes up to. Yeah, you see 1,800, even more. If you have some higher property taxes or HOA fee, you also have to include that in there in this price. So I would say with $4,000 per month, you should be able to qualify for up to $400,000 in housing. So let's get the case of you purchasing a home for $300,000. What does that look like? It is a monthly payment of $1,400. That would easily qualify you for $14,000. So I would say with a monthly income of $3,000 per month, you should be able to qualify for this much housing. This is the principal and interest. The HOAs dues in this certain community, there's $156 HOA. It might be less, who knows? But this is putting 20% down. As a first-time home buyer, you'll only need to put down 3% if you're going conventional, or if you're going FHA, 3.5%, which is only $9,000. Now, your monthly payment is going to go up because you didn't put down a higher amount. And you'll also have a mortgage insurance. Now, mortgage insurance is not that much. So if we customize a little bit the mortgage insurance, because this is from Redfin. I like this website, but their costs are way higher than a regular lender. I paid for my house that I just purchased $70 for mortgage insurance. Homeowners insurance it was like $67 per month. So at 2.24, that's pretty much the interest rate. I got a 2.99 recently, but 3%, let's say. Your mortgage would be here $1,641 per month. That's including the HOA fees of $156. So if you don't have HOA fees, it'll be lower. But just to give you an overview of what you can qualify for, that way you already know, hey, I'm making $2,000 a month. That's not going to qualify me for much. I need to make a little bit more. So that's when you go ahead and you wait to get a better job or something in order to purchase a home. But with that said, let's move on to the next step, which is getting pre-qualified. Right here, I have Jessica Eiroa. She is my lender of choice, anytime I need to purchase a home or I have a client that wants to purchase a home, I always suggest them to go with her. This is her information if you want to check her out. Her address, her website is right here, and you can text her or you can just go to this website. I'll leave it down in the description so you can go and get a quick quote on what you can qualify for. Always consult with a lender when it comes to trying to get pre-qualified. I am not a lender, so I'm just giving you my 2 cents when it comes to this, just because I'm always involved with it. As you guys know, I'm a realtor, and I'm always working with buyers that are trying to get pre-qualified for a home. So definitely check her out, and she'll get you a quote. She'll get in touch with you in no time and get you pre-qualified, whether or not you're going to use me as a realtor or not, but you definitely should. Anyway, let's move on to the next step. Right here, we have this is Redfin. You can go onto Redfin and start looking into your neighborhood of preference. This is after you've been pre-qualified. I'm just gonna assume that you got pre-qualified for $300,000, and you're gonna start looking for a home. Okay. So what do you do? First thing is you sign up for one of these websites and you start looking around, or you go to ask your realtor. And this is my MLS, for example. And what I do is I right away go ahead and sign you up for automatic emails where you will get your houses that are available on the market. So here's what I do. I go onto uh, this website. I say you are pre-qualified for 300, but I'm going to put 300,000 or less, 320,000 or less, because we can always negotiate the price down, right? Maybe not in this market, but yeah, just choose single family home, detached. Let's say you wanted 3 or more bedrooms with 2 or more bathrooms. And you're looking into, you want, let's say, 1,900 square feet or more. And your area of preference is, let's go to the map, and we'll select an area. So this is Las Vegas Valley, and let's say you want to be in Summerlin, okay? So I'm just going to go and get a square. This is your area of preference. And boom, boom, there's no results, no homes for that price range. So we might have to change a little bit the stats here to get you pre-qualified, to get you some homes. Let's say you want you're okay with a smaller square footage, so 1,300 or more. Now you get 6 homes, right? So then that's what I do. I send you these homes and you check them out and you see which ones you like. And I set you up for, let's say, an auto email. So you go to the auto email, I'll put your information in here, and we set you up for emails as soon as possible. That means that as soon as the house comes out onto the market, you will get an email instantly into your inbox, and you'll be able to check out this house and see, what's out there for sale. So definitely this is the fastest way to get homes, and it does make a difference, I'll tell you, because I've had clients that maybe try to get homes from Redfin or Zillow, and they're always like a day or two late, where other people that are using realtors go ahead and get their houses faster, because the way it works, the Realtor.com, Redfin, Zillow, they all get the houses from the MLS. And the MLS, it takes sometimes up to 24 hours for them to send over this information to the internet websites, whereas the Realtor sends you the homes right away as they come out. And 24 hours can make a big difference. By then, I've sold homes that have gone onto the market within an hour. We were into the house, always available for my clients, ready to show you any home that is out there. Even if I'm doing something, hey, if it's going to take whatever it takes to get you into a house, we'll get you into a house, especially in this market. We have a super hot market right now in Las Vegas. Listings are going off the market in no time, and everybody's looking for a house right now. So definitely no listings available, which is driving prices up. But let's move on a little bit more on what else you need to do. So once you're getting the emails and you know the area that you want to live in, that's when you start looking into your neighborhood of preference. and maybe it's you want to live next to a family, your family, or next to work. So you start looking in that neighborhood, start going to open houses, get a feel of the neighborhood, talk to people around in the neighborhood, and know every home that is on the market. Now, that is very, very important in my opinion. If I, for example, am about to purchase a home, let's say in this neighborhood right here, right? I need to know every house that recently sold, and I'm gonna go through all the pictures and make sure I see everything. Okay, this house has tile, it's in good conditions, and it's selling for 288, whereas this one is selling for 290, right? It's let's say it's about the same square footage. You see, it's actually model match, and it looks like it's in good condition, even better condition. It has an upgraded, more modern style. While those cabinets are horrible. Don't ever paint your cabinets like that. That's gonna kill your home value. If I was listing this home, I would totally try to paint these cabinets white to make it more appealing to people. But sorry, I got a little bit off topic there, but it'll tell you a little bit what's happening in the market in this neighborhood, and you got to become very familiar with your neighborhood, because the moment the house comes out onto the market, you will be able to know right away if it's a good deal or not. And if you don't know, at least your realtor should know, because they should be familiar with any neighborhood in Las Vegas, um, so that they know, what you're about to buy, if it's a good deal or not, if you should jump on it or not. Um, but yeah, so pretty much that's the process of getting pre-qualified and getting into a home. Now, let's say you're looking for a new home. I have this website, and I'll link it in the description down below. It is my personal website when it comes to showing new homes. Uh, this is directly from my MLS. You can go onto there, no commitment or anything. You can just check out any home, any new construction home that is up for sale on the market. And sometimes Redfin or the MLS doesn't have those because they're still not on the market. But this website that is part of the MLS, it's a new website. You can go to showingnew.com dash jackram, and you can sign up really quick and see all the homes that are out on the market. Um, I'll leave a description down below for you to check out. Now, what's next? Now you found your home. We're ready to put in an offer. That's when we fill out the contract with the people. And I wanted to go over this because it's very tough sometimes for people that are not familiar with purchasing a home, because in the contract it tells you everything you need to know when it comes to purchasing a home. This is the residential purchase agreement. Now, this is the main document that you need to know, and we're going to go through it together really quick so I can explain the contingencies, which will also explain the process of purchasing a home with it. So, let's say you are purchasing a home, and this is a residential purchase agreement right here. The first paragraph is pretty much your information. Let's say your name is John Rainbow. I don't know why I came up with that name right now. 29 of July is today, and then you do intend to to occupy this property. We don't have to fill it out, and let's say we're gonna put in a full price offer of 300,000. Okay, so this is the paragraph that shows you a little bit the options. Now, right here, this is the most important one. This is the financial terms and conditions. The earnest money deposit, when you put in an offer, you always want to have a deposit money, which is about 1% of the purchase price. So if the house is 300,000, you put in a deposit money of $3,000, right? Now, this is always negotiable, like everything in real estate. However, this is the earnest money deposit is required by any seller, and let's say it's going to be wired within 2 business days, and that's after you get on the contract, okay? To the escrow holder, there it is, 2 business days. And these are not really important. We're not going to worry about these two. Oh, this is actually, the agreement is contingent upon the buyer qualifying for a new loan of 291,000, and I'll explain why in a second. That's going to be conventional, let's say, and then we'll go. This doesn't apply to us for now. and then the balance of purchase price is going to be $6,000. Now, here's why. The deposit money is just something that the seller needs to know that you're serious about the property, right? You can offer as much as you want here. This is the money that goes towards your down payment at the end. Now, as you can see here, from when we got pre-qualified, we said the down payment is $9,000, right? Because we're putting 3% down, and the purchase price is $300,000. Now, that means 3,000 is the money deposit, and you're qualifying for a loan, which is the total price of the house, 300,000 minus $9,000, which is your down payment. That's 291,000, and then at the end, once you close on the property, you're going to pay $6,000 out of pocket. But for now, to get into contract, you only need $3,000, and that 3,000 you have to pay it after 2 days, within 2 business days after the contract is accepted. So let's go to the next page. New loan application. This doesn't apply to you because you already got pre-qualified for a loan. You always want to have a pre-qualification letter before you go into an offer. So this is, we're going to say done because it's already done. Appraisal contingency. Appraisal contingency is the time frame that your lender has to send in an appraiser, which is an appraiser hired by the bank that is giving you the loan to make sure the home is going to appraise for $300,000. So right here, we usually put anything between 15 to 20 days. It really depends on you and the lender, how fast they are. I'm sure Jessica is super fast. She can get you an appraisal within 10 days. But right here, 18 days is a pretty standard that you want to put onto the contract. And you'll get that appraisal contingency through. So let's say the property comes back at an appraised value of $290,000. Then in that case, you can go back to the table and negotiate with the seller and bring the price down to $290,000 because, hey, the bank is not gonna, they're not gonna qualify me for 290, and if I need to do this, I need to come out of pocket with another 10 grand additional in order to purchase this home. So usually the seller is going to come down to the 290 the appraisal value because they don't want to go back on the market. And even if they do go back onto the market, chances are that a new appraisal that comes in with the next person that purchases the home is going to appraise it again at 290, if not even lower. So usually this is a great contingency when it comes to protecting the buyer, which is you when you're purchasing a home. But let's say the appraisal comes back at 310, great. You just purchased a home with $10,000 in equity. You don't need to tell the seller. It is confidential, so the appraiser is not going to tell the seller how much your home appraised for. But you have time until the 18th day after you got under contract to renegotiate the price if the appraisal comes back lower. Now, the loan contingency is another contingency, and I usually use 25 days here just to be sure. And this is the time frame by which you're going to have a loan approval, which means it already went to the underwriter and it got approved. The underwriter checked everything, your employment, your credit, your history, and everything, and they made sure that you qualify for the loan. Now, this has to happen within 25 days. Now, what happens if you pass this and you don't get loan approval? In that case, you will not be able to get your money deposit back after the 25 days is up. So very important, this one, the loan contingency, and you have to make sure you have a good realtor and a good loan officer. They're always in communication and trying to get you that loan approval so that you're not risking your deposit money, okay? So definitely very important. Next thing, this is for a cash purchase, but in this case, it doesn't really matter to us. Here we put in the information when it comes to the items that we want with the sale. Sometimes, people sell their houses with a chandelier included in it, or with the refrigerator, stove, microwave. That's where we put all this information so that we make sure we have it on paper and we don't have any problems later on in the future. And I like to go through these, I'm sorry if this video is taking a long time, but I hope you're getting some value out of this because I like to be very informative with my clients and be very transparent and upfront and disclose everything so that you know in advance what you're going to get into when you're purchasing a home. So very important, this one. Opening of escrow, right here, you put a title company. I usually use Equity Title. I love them. I use them all the time. I never had a problem with them. I use Brian Hearn. Great people. I trust me, from the loan officer and from the title company, I don't make a dime. Nobody makes a dime because it's illegal for real estate agents to make any commission or something referral from these people. So I'm doing this because I want you to close on your house, and working with the right people is one of the most important things for real estate agents, but also for the buyers, because anything can go wrong. A lot of things go wrong. There's always something that goes wrong during a transaction, and that's when you need a good people to work that you're working with to surpass and just go through those obstacles and close the deal so that you get your house, which is the most important thing. Um, so right here we put the date of the close of escrow. Let's say it's going to be in 30 days. That would be next month, August 29th. August 29th, right here. And then, yeah, so you close in 30 days, or usually the escrow lasts anytime from 30 to 45 days, depending on the lender and, a little bit of contingencies that are in the contract. I'm skimming through this one because it really doesn't really make a difference if you know these things or not. But just so that you get a little bit familiar with this, I'm just going to go to the important stuff. For example, buyer's due diligence is contingent, and you have 10 days. Usually that's what I put, 10, maybe 12 days sometimes for clients. What is due diligence? Due diligence is a period of time after you get under contract. You have 12 calendar days according to this contract to do your due diligence, which means your inspection, your home inspection, your checking out the neighborhood, making sure everything is good with the neighborhood, meeting the neighbors if you want, and making sure they don't have any dogs or kids that bark and make a bunch of noise during at night. You never know. This is your time to do your thorough due diligence and make sure that you really like the house and that you're not going to get any surprises later. Also, your realtor will do his due diligence to make sure there's no liens or loans on the property, and that those get settled before closing escrow. Okay, so definitely very, very important, this one. So if you're looking at, if we go through here, failure to cancel, once you're under contract, at that point the seller cannot get out of contract anymore. If they do, you can bring them to court, and 99.9% of the time you're going to win the case. So whereas the buyer has a lot of leverage in this case with all these contingencies, well, one way or another one, you might be able to get out of the contract, because of the loan contingency or other things. Right here is all the inspections. Here's you can choose which inspections you want to perform on the property, and if you find something in the inspection, that's when you go back to the table and you renegotiate with the seller within those your due diligence time, which is in this case 12 calendar days, right? And yeah, within those 12 days, we get all the repairs done by the seller, or we have an agreement from the seller that he is going to repair anything that we found into the home inspection. And this is a great way to negotiate your price after. Let's say you went in a full price offer because of the market right now being on fire. You wanted to win the competition, so you went in full price offer, and within these 12 days you can come up to the seller and say, hey, there's something wrong with the house, which most likely there is something wrong with the house once you perform the inspection. And you can go back to the table and say, hey, I want a $2,000, $5,000 credit for the repairs. And the seller doesn't want to go back onto the market again and put the house onto the market again. So it's a great way to negotiate the price down. I always use this with my clients in order to get them a better price, because after all, that's my job, right? Anyway, this is for the title and escrow fees, and these are usually split 50-50, the escrow fees, which is the title company. Real property transfer tax, that's the seller that pays for it. This is the lender's title policy, which is your bank that is loaning you the money. And this is your expense right here. Once you get under contract, sorry, let me finish here. This is owner's title policy, which is paid by the seller. Now, right here, the lender's title policy and the appraisal is paid by the buyer. This appraisal and the home inspection are the only two fees you will pay before you close onto the house, in addition to your deposit money. So that would be $500 for your appraisal on average, your home inspection about $300,000, depending on the house that you're purchasing. Sorry, $300. I meant not 300,000. So $300 for your inspection, $500 for your appraisal, $800, and $3,000 for your down payment. You're out of pocket $3,800 until you close on the property. Once you close on the property, you have to put down the difference for the down payment, and you are a new homeowner. Oh, and also I forgot to add the closing costs. You will have some closing costs, which will be about 2% of the home purchase price. So anyway, this is pretty much the contract. Lender and closing fee. Here's if you're requesting the seller to pay some of your closing fees. I use this when my buyers don't have enough cash in their bank to purchase a home and they need some help. What this does is, let's say we ask for, in this case, your closing cost would be 2% of the purchase price, which would be $6,000, right? So I put $6,000 here, which means that the seller is going to pay for $6,000 of your closing cost. That way you don't have to come out of pocket when you're purchasing the home, and it's the seller that is paying for these. But that means also that you're most likely going to have to purchase the home for a higher price so that the seller can net the same amount. So it's pretty much a way to finance your closing costs into the sale of the house. That way you can come out of pocket with less money in case you don't have the funds to close on the house. Home protection plan. Here is where we ask the seller usually to pay for a home protection plan, which is a warranty on your home. So the first year, a lot of people think, oh, I'm going to buy a home. What if, the roof has a leak and I have to repair that, or the AC air conditioning unit goes out? You have a home protection plan if you want, so you can protect yourself. If anything happens within that first year, the seller paid for a warranty, and you just have to pay for a $75 copay, I believe, and you'll get somebody in the house to fix your, any problem that is in the house. So really great protection plan, and I usually use Fidelity home warranty, and yeah, definitely a great thing to have. So we're almost through this. The last thing I wanted to cover is the Cic-Related Expenses. What are these? This is the HOA fees, and these are the fees that are paid 99% of the time by the seller. So this is all the fees that they have to pay, and they will give you a pamphlet with all the information about the HOA. All the rules and regulation, the bylaws that are in the HOA. This is if you have a house that is in an HOA community. So the cool thing about this contingency, however, is that when you purchase a home in an HOA community, what happens is by the time you get this, the HOA demand, which is ordered by the seller, it takes about 15 days, sometimes 20 days to get this. Once you get this, you have 5 days by law. You have 5 days to review anything in there. And if there's something that you don't like, you can get out of contract and get all your money back. Now, you won't get back your inspection fee and your appraisal fee, but however, you'll get back your deposit money. So this is a great way to insulate yourself from deposit money, and it's another thing that the buyer has to negotiate themselves out of a deal, which I think it's a little bit unfair because the seller has a seller can't really get out of a contract because they can be brought to court. Once they are under contract, they have to go through it. But a buyer has plenty of ways to get out of contract if for any reason you change your mind. Anyway, you will also receive a seller real property disclosure form and a construction defect claim disclosure if there's any defects in the house. This is the seller real property disclosure form means that if there was any leak or anything wrong with the house, the seller will fill out this form and you will get it within 5 business days from when the contract is accepted. That's when you get your real property disclosure form, and at least you know what's wrong with the house before you go in with an inspector. And if there was a leak maybe in the past or something wrong with the roof, you can tell your inspector, hey, make sure you check this out because the seller said that there was something wrong with the roof. So check this out and make sure that it's fine. Okay. We're almost through with this. The walkthrough inspection of the property, usually I give 3 business days. This gives you plenty of time to go into the property before your closing escrow. And make sure this is just a walkthrough of the property that you can do to make sure that everything is fine, everything is just the way it was when you purchased the home. And if there were any repairs to be done that were agreed upon during due diligence, that they were actually performed and they were performed well. That's when you go in with your inspector as well and make sure that everything is good. And if there's something that is not good, it gives you enough time, 2 to 3 days, to tell the seller, hey, there's something wrong here, fix it up, otherwise we can't close on the property. Okay, so you never want to do the walkthrough the last day before you're about to go sign. Okay, delivery of possession is going to be a close of escrow. Sometimes you can change the delivery where you can get into the house a little bit before or a little bit after. I always try not to suggest this because there's always something that goes wrong with this. But yeah, that's pretty much it. This is not much stuff, not really important things. I don't want to make this too long. Eventually, when you're about to purchase a house, you can ask your realtor to go through all those. And I always go through all those details with my buyers and make sure they're informed. But at least they can go through this with their realtor and see what they need to know about this contract. This is for any addendums. If there's anything else that you want to add to the contract or additional terms, maybe you want the fridge in the deal, so you add a refrigerator to convey with the property, right? And then this is just your broker's information, their broker's information, and then that's when you go ahead and you sign, right? Let's say I'm representing you, I'm Jack Graham. Here I will put my broker, and right here you would sign and done. So yeah, that's pretty much the contract, but I just wanted to go through it so I can explain a little bit the contingencies, but I hope that this video is helping you at least understand a little bit the process and all the contingencies that are in there so that you're a little bit more prepared. All you have to consider though is from when you purchase a home, right? You purchase a home, you have 10 days of due diligence to go and do all your inspections, right? You have 15 days for the appraisal to come back and make sure that the house appraises for the right, for the price that you purchased it for. Then you have the loan contingency that you have to meet within 25 days. And these days are variable, okay? It doesn't really matter when exactly, but this is something that you put into the contract in advance. And then after that, you have the close of escrow, which is usually 30 days, sometimes 45 days, depending on the lender, and a little bit of the contingencies that you might have. Maybe the seller wants to stay in the house a little bit longer, so they need a little bit more time to buy another home. Maybe, so they need a little bit more time to get under contract and purchase the house. So yeah, with that said, guys, I just wanted to go over all of this for you to have a more clear mind of what happens when you're purchasing a home. Let me see if I forgot anything here. But yeah, so that's pretty much everything I have for you guys today. After that, pretty much if the offer is accepted, you get under contract, 30, 45 days, you should get your house. And that's when I come and I give you the keys to your home, and congratulations, you are a new homeowner. And your offer was accepted, everything went well. Usually everything goes well, but there's a lot of hiccups that come up throughout the escrow process, and you want to make sure that you have a good agent that represents you and that does the right things to negotiate for you and get you the best price possible. Because I'll tell you, I've had a lot of bad agents that I worked with where they were selling the home and I was the buyer. I was representing the buyer, and I was able to get them the, crazy good deal on the house just because the agents didn't know what they were doing. Maybe they priced the home wrong, the wrong way, way below market value, and we were able to go in and just sweep that home off the market right away because we were the first ones in there. Um, so definitely, if you don't want to use me, get your agent of preference, whoever it is. But if you're in Las Vegas, I'll be super happy to help you out. Again, my name is Jack Graham. I'm with Simply Vegas, and I will be happy to help you out. Give me a call whenever you want. My phone number is 702-606-4815. 4815. Again, 702-606-4815. Thank you so much for watching. See you on the next video.